So yeah, once again, good morning, and thanks for everyone for being here today. We are recording, so replay will be available on my YouTube channel. I'll post a link in my thread. So the focus today, like I said, we're going to look at more of the IB side of things, with EDGEFUL, excuse me. We're going to look at how to interpret the data. I'll show you some things I'm doing, some things I'm still learning as well. Like, I'm not saying I'm an expert, but I'm just analyzing data and sharing what I see. No problem, Ezekiel. I don't know. How's everyone else's week been? How has trading been for everyone? Are we green? Are we red? Are we break even? Are you guys having the same ICT type issues that I've been having? Let me know. Lola, what's up? I love these inspirational posts by Matt. That looks really nice right now. Jeez. That looks really nice. Yeah, Kuva, very hard, man. Very hard. And the news, oh my goodness. Crazy, right? Crazy. So if you guys don't know, I have my own channel inside of the AshCap Discord. It's just under Trader Xkira. And inside Trader Xkira, I got a bunch of different threads that I've created. Originally, I just kind of created it to house the live streams and some affiliate links and stuff. But then I started to expand it, started adding stuff about trading IQ, which I had originally had on the premium side, but I migrated everything over. So just a lot of, I mean, it's not a lot of things, but it's just like really key things that I still use. And I've shared it with you guys because I think it's beneficial to help you grow. You often see me talk about this all the time, so it's there for you if you want to kind of review. There's some Notion templates for journals, for reflection, like monthly reflection or daily reflection. The IFG Pro Plus indicator that I use for ICT stuff, I have my indicator settings there. And just some other inspirational things, right? Some stuff that I've posted there. So that's there. And then more recently, I've created the IB EDGEFUL thread. So I posted it 4 days ago, and I got about 52 posts in there. So you can see I'm pretty active inside this thing. And let me see, how do I get to this? Let's go like this. Okay, there we go. So the whole point of this thread that I created was just so I could house a lot of things that I'm thinking and that I'm seeing, and I could just kind of put everything in one spot, kind of like how Matt talked about with Discord. He wanted to put all of his attention into one area so he could focus. So I've kind of done the same thing. So anything to do with IB EDGEFUL, that content's going to be shared here for myself. Of course, I'm chatting in the Gen Chat with everybody and sharing information and blah blah blah. But my primary focus for IBs have been on MNQ, MES, MGC, and MCL. So I'm using micros. Mike, what's up, man? OG Mike. And then I also have a affiliate link for EDGEFUL. So if you do feel interested in giving it a go, just click the link in my bio, or just click this link, and of course anything like that helps me out. So we're gonna go over a bunch of setups that took place. Now this is all very new to me in the sense of me starting to track things. So I don't have up a lot of data, so I'm just going to put that out there to everybody. When I first started kind of trading IB with the data, I was making a few mistakes, but I've kind of caught myself with what I did wrong. Or if it's a paper trade, like why did I, basically just updated myself on like what was happening, right? So if I took a loss, I was like, why did I lose that trade? So I subbed to EDGEFUL last month. I would probably say it was on the 24th. Sometime in the evening. So I started to implement stuff on the 25th. So you'll see I started tracking stuff on here, and then I deleted a bunch of stuff. And then now I'm only tracking it now since pretty much the last day of March. So we're going to look into this stuff. If anyone has any questions about anything with all this stuff or anything beyond this, just make sure to drop it in the chat and we can kind of go over these things. And I'm keeping my eyes out for this. Okay, Mike's already going to start drilling me. I'm good, Mike. I'm good, man. I'm good. I'm good. It's been a long week, but I'm looking forward to the long weekend. Thank you, man. Thank you. I hope you're also well, brother. So before we go into this, though, I wanted to just quickly talk about risk management, okay? Because it's important to, not over leverage yourself. And I mean, when we see something working, right, like a model, most people just kind of jump to these things. You shouldn't just jump to these things. And when you're starting to, work through your accounts, you got to be careful. Okay, so one thing I'll show you is the power of compounding. So Tempo Trade's probably the best IFEG trader I know. I've learned a lot from this guy. So shout out to Tempo. But he had a post a while back, actually not even that long ago, and he just mentioned if you have like 550K accounts with a trade copier and you're risking $300 per trade and you aim for 1R, one clean win is $1,500. One clean week is $7,500, right? That's like basically taking one trade, shutting it down type thing, right? And looking for A plus. A lot of times we overcomplicate things because we are thinking in our head that you got to aim for 2R, right? If price goes, very close to 2R, do you take it? Do you not take it? Oh, it didn't hit 2R, so I'm not going to take it. Green is green. You know what I mean? You have to kind of check your ego a bit. Interesting story last night. I took that IB trade on M&Q, and I was trading with my wife, and I was posting this stuff in the Gen chat. Actually, it's pretty funny. Let me see if I can find it because it was actually kind of funny. See if I can find it. Yeah, we were all celebrating shit yesterday. It was pretty funny. Okay, here it is somewhere. Yeah, right here. So I traded this IB setup yesterday on my phone, and my son and my wife were with me. They're like sitting on the sofa. My son is literally sitting on top of me while we're watching this trade play out, and it was pretty painful. Like, it was a pretty painful trade to sit through. And I was telling them, I'm like, this thing is going to rocket either one way or the other way, just like it did the other day. So I was having anxiety of being on the 1 minute time frame, but I kept looking, and then my wife's like, you should go back to the 1 minute. I can see things more clearly. But I'm like, I need to go to the 5 minute because it's stressing me out. So then basically the point of what I'm trying to say is while we were all watching this together, they saw how the trade played out. You know what I mean? They saw how, like, what went into the trading. They understood the risk. And my point is this, like, on that setup that took place, and I'll show you, I mean, if anyone remembers it, here's a good example, right? So Vidal shared a chart. So you can see how price flies way up higher, right? So with the IB setup, I was literally taking profit at up here. And this is kind of my point to this thing, right? She told me, she said, did you take profit at the top? And I looked at her and I just kind of shook my head because I was like, the old me would have felt bad that I didn't catch that full move, because in hindsight, it's easy to say that, right? And I said, when I thought like, and I told her, I was like, when I thought like that before, that's what got me into trouble, because I would think the price is going to go way higher. And then sure enough, it tags the top and it goes back down, right? This is like Murphy's Law. I said to her, my goal was to just take the profit at the top right here. And that was it. I don't need anything more than that because my mission is accomplished. You know what I'm saying? Alice, what's up, brother? So I just wanted to put that out there because I want to just show you the difference in terms of someone who doesn't trade. And yes, it's my wife, but someone who doesn't trade, someone who's on the outside, and then the thought process of what a trader has to think like. Because if I keep trying to think about, oh, I left all that profit on the table and I should have done this and that's the kind of stuff that's going to get you in trouble the next time. Okay, so I just want to put that out there. This is a real life example. And yes, it was awesome that my son was with me and my wife was watching, and we were watching this trade. And of course, when it played out, we're all cheering. So it was kind of fun that way. The other thing I'll say about the trade, which was interesting, was actually, you know what? I'll just show it on the chart, but let me go back to the risk thing. So where were we? Yeah. So anyways, that's the stuff with the risk. EDGEFUL actually has a pretty cool risk calculator too, which I find interesting. So like, if, I'll give you an example. Like, let's say, most of us have, 50K accounts. Let's just say most of us have 50K accounts. So you got about 2K drawdown. And, Ashtrade's in the house. What's up, Matt? What's up, brother? Hope you're well, man. And thank you for everything, man. Thank you for everything. You are truly the GOAT. I know people keep saying IB is goated, but my friend Ashtrades is actually goated. So, going back to the risk side of things, 50K account, $2,000 in risk. Some of us, if you're, more capable of trying to, pass an account really quickly because you have data that supports your setup or whatever, taking those kind of higher risk trades, maybe you're taking $400 or $300 per trade, right? But you can see that's 15% of your account, 6 trades. Now, it's saying the recommended trade is $80 per trade. It doesn't necessarily mean you have to do that, right? 25 trades, that's like till you lose, but, think of how many you have to take before you win, right? I think there is a sweet spot. I know Matt often talks about 10%, and I kind of like that. 10% of your account, 10 trades, and, you slowly chip away things, right? So I just want to put that into perspective. You can see here, this is putting us into the aggressive territory. If I start to put it 150, that puts us into the moderate, right? So when you start to see the stats this way, you start to understand that it's a game of numbers. It's a game of probability. And this is what really piqued me about the IB setup with EDGEFUL, is because EDGEFUL is using data based on these ranges. And I think it's absolutely insane. I didn't fully understand it at first. And then when I started studying Mr. Zink a little bit more, because like I said, the IFVG setups were just non-existent, right? Like I'm literally sitting waiting for a trade, and I'll show you what I mean. So like, here, let me show you what I mean. So put this up like this. Like even today, right? Like we had a new spike candle, and I was thinking about trading the data wick of it, right? So usually when I trade data wicks, it's there's a wick high here. We have a data high, oops, and we have a data low. And I'll usually wait for one side to sweep, and then I'll catch a long bid to go the other way. And it has nothing to do with the daily EQ. It has nothing to do with market structure. The market structure, in the sense of like H1 levels or H4 levels, it's literally these two. And the whole point is like one side sweeps and then it goes to the other side. So if I'm looking at a setup like this, like you can see that there is an IFEG right here, right? There is one here. So there is a play here, but let's just see what that looked like. So let's just say I entered here, and let's say my stop loss is just underneath. So it's about 20 points. Let's see, does it hit 1-1? And it doesn't look like it does, right? So you get up to this FEG here, and then it reverses. So, like, this is kind of what I'm trying to say is, like, these conditions are not ideal. They've not been easy by any stretch of the imagination. Yes, sir, it's Big Daddy. It is recorded, so I'll post it later. But this is just an example I'm talking about, right? So you have a clean setup, but it doesn't want to go any further. Now, if I tighten up my stop loss, there's probably a better chance that this might have hit 1R, right? If I like timed it perfectly with, or aimed it perfectly with this FEG. But that's, 13-point stop loss. It's possible, but, in hindsight, it's easy to say this, right? I think for me personally, when I look at this, I probably would have set my stop loss a little lower and then would have just thought price would have filled this a little bit more. But this is kind of what I'm trying to say. It's not been easy, not even for me to trade ICT stuff with IFEGs. And I'm not saying I traded today, because I did not trade today. I decided to sleep in and, use my electric toothbrush, floss my teeth, take some time, shave, blah, 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 right? So I decided to do a lot more on that side of things than to hustle and, in my sweats or whatever, just get to the computer. So anyways, IFEG-wise, like I said, it's been tricky. But let's talk about IB, because that's what I said I wanted to talk about for the most part. So let me click on IB here. Okay, so IBs. I think before we go into anything, has anyone looked at the data? Has anyone understood the data? Has anyone not understood the data? Just curious. Where's everyone at with IBs? Like, what's your experience with it? What's your exposure to it? Because then it gives me a better idea of maybe where I can focus this conversation instead of going super in depth in terms of the more, I guess, technical or analytical side of things. Like it says, I've been looking at it, but not 100% sure how to interpret it. The overviews in your channels about the highest probability setups. Okay. And we are going to talk about that. So that's cool. Okay, so you're in an EU short right now. Send it. Hollis, man, are you gambling? Are you gambling? That's wild, man. No, I'm just playing around, brother. Stats. Yo, man, stats. Yeah. So Ash has been doing a handful of trades so far using IB. Don't have EDGEFUL accounts, so don't have stats on all the different topics. Well, if you use my affiliate link, you can get it. I'm just playing. Ezekiel says, I like his mechanical and simple way of operating. Yeah, I think one of the things I'll talk about with that is to think that you can trade without ICT it's like kind of blowing my mind, because it's like you have to unlearn a lot of things, because often you start trying to rationalize the chart using ICT. Like, well, is it in a fair value gap? Did it sweep a higher time frame swing high, right? Or swing low? Like, did it sweep liquidity? Is there, a breaker block? All these little funny things that we always think about when it comes to IB, you actually don't need to think about that. And you have to unlearn everything that you thought you knew. And yeah, you can't overcomplicate anything. I think when I start seeing some other traders trade, and I'm not naming names or anything because I'm not trying to throw shade or anything like that, but I've tried to study some other traders and the amount of steps involved, and we're talking about ICT stuff here too, but like the amount of steps involved, the amount of time frames involved, the amount of, if you need this, and this to happen in this specific order, I'm like, give me a break. Trading is not supposed to be that hard. And that's the beauty of when I found Matt, right? Because Matt's concepts really simplified everything, streamlined the whole approach of how to use higher time frame, MTF, and then LTF, right? So the concepts are so streamlined that's why I really resonated with it. But there's other people that are just going next level, and I'm like, I don't know if I can trade like that. I don't have the bandwidth for it. So, crazy that you can be profitable without stage 2 PSP SMT. Let's go. Exactly, right? I'm already lost, man. You're speaking a completely different language to me now. So, and I think that's the thing with ICT too, right? Like, I think we're gonna keep seeing more and more types of revelations, and there's no shade to anything. It's just it's marketing, it's business, perhaps it's people trying to gain leverage over the influencer market, perhaps, right? Like they want to demand or command the community and blah 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 blah, right? So yeah, Matt, we don't need an NWOG with SMT forming a PSP, man. It's funny, when he first started talking about PSP, I'm so old school that I thought about the PlayStation Portable. If anyone knows what I'm talking about, they put PlayStation into like something like that looked like a Game Boy. PSP is what it was called. My mind immediately went there. Yeah, I know I'm old school, man. But I still have my PSP too. It's pretty funny. I was like, what the hell is PSP? What are you guys talking about, man? Okay, 24, you know what I'm talking about. You're a gamer, man. All right, cool. Oh my goodness, the suspension block aligned with strength switching, the Reaper FEG. I don't even know what the hell that is. This is too good. This is comedy, man. Okay, so let's get back to IBs, folks. So last week on NQ, last week on NQ, let's go back to Wednesday the 25th, actually, because that was the first one that I had looked at, and that would have been at about 10:30. So it's a New York AM. It's a New York AM setup. And all joking aside, there's a place for everything, right? There's a place for everything. ICT, there's a place for it. I'm not, like I said, I'm not throwing shade on it because, like, I do like trading IVGs. It's just when the market's in hard mode, trading IVGs can become very grueling. It's not that the IVG is hard to put yourself into. It's just like the patience required of waiting for a level to be hit, and then when the level hits, you really have to watch your risk because, like I showed you with that data setup, price literally doesn't move anywhere. It rolls over. So you really have to be aggressive. So there's a lot of break evens is kind of my point, right? And when you start getting into that, it's frustrating. Okay, so here is the Wednesday the 25th. And you know what I'll do is I'll just use MNQ because that is what I have been using. Let me see if I can pull up the data for a second so we can interpret what happens. So, sorry, give me one sec. High to low. Oh, high to low. Okay, so I'm just gonna pull this over here so we can see it. Okay, so first off, Wednesday the 25th, this is what we get, right? So when we're dealing with IBs, we're dealing with the goalpost, right? 9:30 to 10:30. Now, there's a couple ways to go about this. We've seen, so I'll give you an example. My first look on an IB was through Matt when he was sharing it, and the way he introduced it was, you wait for the high or the low to form first, and then once it's formed, you take entry at the midpoint, right? Or the EQ, depending on the direction, right? So in this case, because the high got formed first, we'd then be placing our limit entry at the midpoint for a short, right? To go lower. Then I started watching Mr. Zink, and it's like Mr. Zink's taking setups well before it closes, right? And he says usually, I don't know, I think he said usually in the last 15 minutes, if I'm not mistaken. If I'm wrong, I apologize. But I have seen him take early setups. Sometimes I've seen him take setups even earlier than that. So he has logic involved there. And I think I'm starting to understand some of his logic because he's using a shorter based goalpost. So like instead of 9:30 to 10:30, he might be using 9:30 to 10, right? And then there's a way you can actually play off of this level too. So you see how can I explain this? So you see how it ends at 10:30 here? I mean, he might even take a setup right off this level, and it's called the 25% retracement. But I don't want to get into that because it's going to get too complicated. And but I just wanted to explain to you my thoughts on why I think I've seen him taking those setups a little bit earlier. Let's go back here. Okay, so here's the setup. This is the stats. Okay, so it's a Wednesday. 9:30 to 10:30 is the window block. We're looking at the range between 9:30 and 4 p.m. Okay. Now, if the IB high forms first, right here, IB high forms first, right? Then what are we looking at? Well, we are looking that the first break is going to be an 82% chance to the low. Now, I always round up my numbers if it's above 50, just so you see me what I'm doing. I'm not going to put like 81.82%, folks, and nerd out that way. I'm just going to round it up. So I just say 82% that the low is going to break first, okay? And then if I show you another stat, let me see if I can pull up another picture here. Okay, so here's the second picture now. So the second picture, or the second data stat here, is what happens, right down here if you can see my mouse, what happens if the high forms first and then price closes above the midpoint of the EQ. So I like to personally use both of these stats in the mix and then analyze what that means. So on the first more generalized stat, it's just the average on the day. So 82%. that's perfect. Ideally, I am looking for anything above, 70% and higher. 70 to 75, I'm like, I get a little bit like, I don't know. Still trying to figure out like if I should do it or not, because it is still not that good. But 75% and higher, 80% is like no brainer, right? So when I see 80% or 82 or higher, whatever, right? Like it's a no brainer. Now, what happens with price? So price closes right here, okay? So this is now 10:30, and we are above the EQ. So another thing I also do is I'll just rock some of these these fibs. Price graded Fibonacci for the range. And the reason I do this is just to get the price there. Oh, whoops, this is a mistake. Let me fix that. Sorry, 1 second. Just noticed a mistake here. Okay, so what that does now is it puts the price on each of these levels for me, and then I can just kind of lock it, and that way I can examine or analyze what I'm seeing, okay? So here's 10:30, price closes above the midpoint. What does that mean? Well, now it's saying there's 100% chance that the low is going to break. Now, what does that mean, 100%? Because you'll say to yourself, nothing is 100%. Here's the thing. When you're looking at the data, you can observe the data, and I'll just go back here, look at the bottom here. It says date range, 6 months. So you can go back 6 months, you can go back the year to date, 1 whole year, 2 years, 3 years, 5 years. You can go back through all of these years of data to see specifically what happened on a Wednesday in between 9:30 to 4 p.m. with a 9:30 to 10:30 a.m. IB range. What happened? Okay? And when you start to pull data from a larger pool, or like a date range, and then start to see those stats, if they're all kind of in the same range, then that's giving you pretty good data that you have the numbers to support the position that you want to take. So in this case, the position I want to take is to go short. 82% chance that it's going lower. It closed above the midpoint. It's saying there's a 100% chance. Now this is a 6-month date range that I'm exploring, okay? So if you think about like how many Wednesdays there are in a 6-month time range, you might say that's not that big, right? In terms of sample size. So you can increase that if you'd like. I've noticed Mr. Zink uses 6 months. I've noticed other traders who've been trading this for longer than I have. They are also using 6 months. So I'm kind of exploring 6 months. I might check a year. I might check 2 years. I might check 3 years. I might even check 5 years before I do things just to see where the numbers sit. But I will say from what I've seen, most of the time it's usually sitting in the same range, roughly. One thing I learned is that if you start to see a fall off or a change, then that can also tell you something, right? So like if 5 years ago the levels were higher, and then as you go to a lower sample size, you notice that the percentages are decreasing, that's telling you that something's changed, right? So that means you got to also pivot, potentially, depending on what you're doing. But given, we'll keep this very, very simple, very straightforward, 6 month is our sample size. It's at 100%. So what does that mean? That means that when price is up here, and I'm seeing the data say 100% and 82%, you kind of have to take that chance, right? You kind of have to take that chance, because if you don't, you're now playing with emotion, right? And that's the whole thing with this type of strategy, is you're not trying to play with emotion. You're trying to play with the data. Now I'll show you one other picture. So this was what I took. So when I snapped this trade, because like I'm building the data, I'm building the stats. How do you play this? Okay, so if you take a trade here and you win, your RR is no longer 1-to-1, right? All it says, still better taking it flat without any data. Play with probabilities, do not play with opinions or emotions. Yeah, I think in anything, that's kind of where you want to go. I find with ICT, it gets a little tricky sometimes. But when it comes to this type of stuff, I mean, I think the emotions that I feel when I've done this is just in the execution of it all, and then like waiting, like watching things play out. But point of my story is, to me, this was why the trade was valid, right? Because you have a greater risk to reward in a setup like this. So when I see things like this play out, from what I've gathered with my data and what I've seen, I feel like you kind of have to take that chance and just enter as high as you can, place your stop loss above. Now, one thing I'll also do is when I'm setting up the trade, so in a situation like this, like, you know, this will probably be pretty much like a market order. Now, one thing I'll note is this. So in order for the data to collect and update inside EDGEFUL, what that means is that price has to sweep the swing high and it has to sweep the swing low. Okay, if it tags it, that's not a sweep. So that means that the stat hasn't updated. And I was thinking about this, and what that led me to believe was that I need to place my stop loss not at the swing high, but actually 1 point above the swing high. Okay, because if I get wicked out and price hits the actual high here and creates an equal high, I'm now out of the trade. But technically, the trade's not invalidated. So I want to just put that out there to you. It's a small little thing I was thinking about. All what I'm saying is that when I place my stop loss and I place my TP, I place it literally 1 point away from that level, because in order for the stat to qualify and validate, it has to sweep the level. It can't just tag the level, right? Because if it tags the level, it's just creating an equal high or equal low, right? And in order for the data to update properly and for you to play with the data, you need to see the sweep. So this is why I set my stop loss 1 point away. In this case, because it's a high, I'll place it 1 point away from the swing high. And then in terms of my TP, I'll, you know, if you want to place it at the low, that's fine. If you want to place it 1 point below, that part is up to you. I'm more about talking about the stop loss side of things, because it's the risk side. I don't want you to get kicked out of a trade. So like if I lower this by 1 point there now, right? So you can see it says 24,328.5. I've now set my TP at 2.5. And you can see with the RR here, entering this trade, somewhere in this area, you know, you're getting close to a 3R, right? And you can see price came really close here to tagging this out. And this is the thing with the probabilities, is that, like, I keep posting that funny GIF inside of the Gen chat now when trades do stuff like this, but it's, you know, it's with Penta from the WWE, right? Cero miedo, have no fear. You have to have no fear in this business, because if you're setting up the whole trade based off of data, and you're taking the trade off of data, then you should manage it just like you set it up. And some people say, hey, you know what? I'm just going to shut my screen down. So Alice, I'm going to shut you out, because I remember last night you said, I actually set it up. I let the data play and I was playing video games, right? You didn't experience any of the stuff that happened in between your entry and that exit. You probably came back and just saw everyone like going, oh my God, I can't believe we won, right? So, oh, that's funny. League of Legends. Well done. But point of the story is, if you are watching this, you know, you are going to see potentially crazy things happen, right? But here's an example of that trade almost going to stop loss, and then here's where you're getting rewarded, and then here's where that stat comes in play. So when I start seeing this more and more and more and more and more, I'm like, holy crap, the data is next level crazy with the IB setup. I feel like you can't just trade the IB setup without the data. For me personally, it doesn't make sense. For other people, maybe it does make sense, and that's cool. Like I said, it's a trader's choice. But the second I started to look at the data and understand it a little bit clearly, or more clearly, it became so apparent how valuable that data is. And this is why I opened that thread. And this is why I'm sharing what I'm sharing for now. Just so people can understand a little bit more clearly in terms of how I'm seeing things. Because I'm not always going to just share everything like this. I'm doing this for now. I think down the road, what I'll probably do is I'll just start streamlining some things. But I just wanted to get you guys to understand first, right? You can do this by yourself. Like, you don't need me to do this. You can put this together yourself. And then through that, you might also even figure out some other things that work better for you, right? Because maybe the way I'm doing it doesn't make sense to you 100%. Maybe there's some things where you're like, blah, 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 blah. Maybe you only want to do this or do that. And that's totally cool. You have to do what's best for you at the end of the day. I can only just, plant as many seeds as I can and then just let those trees grow wherever they will, right? So that was Wednesday the 25th. There was also, let me see, one other thing. I think there was an ES trade, if I'm not mistaken. Yeah, so here's ES. Okay, so let me pull up ES now. So ES, I won't show you the data, but ES had an 83% chance, okay? I didn't manage to snap a shot of the data, what would happen if it closed above or below. But in this case, it closed below the midpoint. But you can see that this was definitely the weaker asset, right? Because it didn't go anywhere near the top of that range. But you can see that they're correlated. So this is one of the things I learned. Okay, we're going to go to another day. Let me go to, because this is one of the lessons I learned, which I wanted to talk about. Where is it? One sec. Okay, I can't find the example, but what I'm trying to get to is this. If you ever have a situation where there is uncorrelated price action happening between NQ and ES, or MNQ and MES, what does that mean? So what that means is that if you have MES making a high first and then a low, but MNQ is actually done it the opposite way, so MNQ has a low being formed first and then the high, you should definitely avoid that trade, in my opinion, because you're now dealing with an unpredictable situation. The probabilities are now, even though the numbers are saying what they're saying, you're still putting yourself in a lower probability, because the whole point of this is to have as much correlation as possible, right? You want assets that are correlated to be moving in the same direction. So I wanted to just put that out there because I have noticed that in the past, and that's just recently. I can't find where my example is, so I apologize. Maybe I have it in the thread. I don't even know. I have to find out. Okay, so here's another example, but let me just double check to find out. Okay, here we go. So MNQ and MES aren't correlated, no trade. So this would have been April 1st in the morning. So let's just jump forward to April 1st. Okay, so April 1st, 10:30. Let's hit the rewind button and let us split the screen. Oh, whoops, I just realized I used 4 split on that. Let's go back to my One Punch Man. Apologies, try this again. Yes, sir, One Punch Man. Gotta love it. Okay, here's the example. So 9:30 to 10:30, I had said MNQ and MES aren't correlated. That equals no trade for me, right? Let's just look at the data for a second. So it's saying here, if a low forms first, 71% chance to the IB high. Above the MP, 71% chance to the IB high. Okay, so let's just see MNQ. So low forms first, then the high forms first, then price gets taken out here and does hit that level. So that was a 71% chance, right? We just saw that stat. But remember, low to high, right? So let's go to MES now. So MES had a high to a low. And the stats on MES here, IB high first, 85% to go lower, above the MP, 50-50. Below the MP, 91% chance that it does go lower. Okay, so if we look at the stats, here's the high, here's the low. Price closes above, right here, it closes above the midpoint. Let's go back to the stats. MES, IB high first, closes above. This now puts the trade at a 50-50. But remember, there's uncorrelation happening. So even though this looks really good for the short, you would have got cooked. And this is the uncorrelated part I was trying to talk about, because MNQ, right? If we go back to MNQ is sending this thing higher. And that's the thing with these assets, is that you don't actually know when it's uncorrelated which way it's going to go. You really don't. Oh, Mike's dropping some stuff here. So he's also dropping some sauce. So that was a note about the uncorrelated asset part. Okay, so you have to be mindful of that. I don't want anybody falling into traps that way, because when I was looking at things, I thought, oh, this is a situation I've never experienced before, where there's an uncorrelated thing. What will happen? That's what happens. And the thing is, if I took NQ, well, it never tagged my entry before it hit the TP, right? But if I was like, okay, well, I can play MES and play the short, well, guess what? I got cooked. I would have got cooked. And that's all because of that uncorrelated. So don't take trades when you see that uncorrelation happening. It's not going to help you. The next thing I was going to talk about, which was... okay, another concept. So, another concept is, so when two correlated assets are not correlated, then do not take the trade. 100%. Yeah. So another thing to think about is, so let's take an example from March 31st now. So MGC and MCL have both reached the TP, but there's no entry, right? So when a situation like that happens, let's just go back to NQ, for example, because that's what happened here. When this happens, right here, the TP gets taken. So if you're trading IB, then the trade is actually technically invalid. Okay, like even though it comes back down and it goes back higher, you have to understand, like, that's a completely different type of setup now. You're not playing the IB setup. You're playing something completely different. And there is a setup that I'm talking about. It does involve IB breakout and breakdown retracements. I'll talk about that later briefly. Maybe down the road I'll speak way more about it, because I'm still understanding the ins and outs of it. I just started learning about it, because I was trying to think about, like, my thought process was, okay, if I'm trying to take an IB setup and it hits TP before it tags me in for an entry, is there still another way I can catch the momentum of that trade? Because typically, if it's wiping liquidity out or it's breaking out on the opposing side where I want price to go, there's a good chance it's going to continue in that direction, right? Because Mr. Zink always talks about the trend, right? The trend, we got to follow that trend. So I thought, is there another way I can take that trade? So when I started studying more about the EDGEFUL data, there was a concept called the ultimate reversal or something like that. It uses the idea that when price breaks in that one direction, what percentage of the time does price come back to 25%? What percentage of the time does price come back to 50%? And what percentage of the time does price come back to 75%? That's a whole different setup. So I'm still exploring that. I have shared a little bit about that, but I'm still working on that. I'm still learning the ins and outs in it to put it into perspective. But I just wanted to show that part. Ultimate reversal played out yesterday. So you know about it. So there's a whole bunch of concepts with EDGEFUL that you can use and kind of put them together. What time is your IB? 8 to 9? Oh, he's talking to Mike. Okay, so What was the other thing to talk about? Let's see. So we did that. Where are we? We did the risk calculator, data driven. Yeah. So essentially, this is what I wanted to show you, right? So with that, so here's an example where we have M and Q. We're looking back 6 months. It's the New York time frame, 9:30 to 10. This is now accounting for all days. Okay, so basically, it's saying in terms of this report that I've set up that, and now I'm using a 30-minute IB. That's another thing I'm exploring too. It's like instead of using see the initial balance time frame, instead of using 9:30 to 10:30, what I've started noticing with another trader who's really successful with this stuff is that he was using a 30-minute. He was using a 30-minute IB time frame, and I noticed maybe Mr. Zink's doing the same thing. So I'm just starting to look at it, but the data is showing you that when price breaks out of that IB range, so in this case it would be 9:30 to 10 a.m. What is the 25% range of that retracement? What is the 50%? What is the 75%? So you can see that you can actually play this as a secondary option. Okay, so if I go back to this stat, for example, and I just change this back to, like, if I just put it back to 10, for example, we'll just take a quick look at this, right? Let's put the fib up there. So we can see here price breaks out at this point, and then the question is, what percentage of the time does price come back to 25%? What percentage of the time does price come back to 50%? And then what about the 75%? So if we go back to the data, we have a breakout. It's saying 70% of the time, price is coming back to tag the 25% level. So if we come back here, that's right here. So this is the secondary option that you can potentially play. Invalidations, I'm trying to still figure that part out, which is why I'm not fully going into this. Because, there's still a percentage of the time price could come back down here, right? And then, so like, where do you put your stop loss? Or do you wait? Or are you taking a different type of, maybe like you got to use some ICT in this situation, right? To take that trade. I'm still trying to figure that part out, as I don't think you would just blindly enter. I think there's got to be some common sense involved here, because you want to wait for some sort of market structure validation, perhaps, right? So just to put that in perspective, I have noticed that it's a really, really cool stat to have. And then, of course, you can dive deeper, right, where you can go into specific days, right? So that was what day was that? That was a Wednesday. Now, I know it's already accounted for, but I'm just trying to show you what I mean. So if I click off all the days, so it's just showing me Wednesday, click save. Here's the breakout. It's saying 90%, like this could be, this is already updated, but let's just say it wasn't, right? This would say 90% chance that you're tagging 25%. So that's giving you a lot of, confirmation or confluence that this level is definitely going to get hit. And you could take a trade off that level. Okay. So completely different setup, secondary setup, but something I wanted to just kind of briefly talk about. And then I will be able to talk about it later once I start putting some more pieces together, or just, once again, planting seeds so that you can take it and run with it. Ezekiel says, Kira, statistically, Tuesdays are the worst day to trade in New York. I've seen Mr. Zink talk about that. I know he has rules, and this is where, independent thinking is very important. Matt has often talked about independent thinking, and there's something to this. Just because one trader trades in a specific way and they can teach in a specific way, and there's nothing wrong with that, right? Like that, you have to learn somehow, right? So you study the person who's successful doing it. But at some point, your personality, like I talk about, and your IQ, as it increases, your personality is going to change as your trading IQ increases. So what's going to happen is you're going to have to start trying to figure out on an independent level, what do you want to do, right? You can't just copy what Mr. Zink does. You can't copy what I do. You can't copy what Matt does. Yeah, I have tried the lunch IB. We'll talk about that. I've been monitoring it, but this is kind of my point, right? So like, I know Mr. Zink was saying he wasn't going to trade Globex, I think, yesterday. But there was a handful of us that were trading it. Some of us more quietly than others. But of course, when it won, everyone jumped up and down and was happy to share that they won. I'll show that trade actually right now because that was a pretty funny trade. And then I'll talk about the lunch stuff. But my point is the independent thinking, right? You have to figure it out yourself. For me personally, I just feel like even though one day might specifically be noted as the worst day, if I see the percentage in that range that I like, so if I see double confluence of an 80% and higher, something like that, 75% and higher, I kind of feel obligated just per the data to take the trade because the data is telling me it's good. Now, there is a curveball to this. And the curveball to this is news. And there's another risk thing I wanted to talk about. If Trump is ever speaking, if Powell is ever speaking, if there's ever a news drop about to happen right where you would want to be entering into a position, you need to stay sidelined because the data can get cooked real fast. You know what I'm saying? Like, your data is no match for Trump's tweets, for Trump's comments, for Powell's comments. Your data stands no chance. So whenever that's happening, you have to stay on the sideline, okay? These are filters you have to create for yourself, okay? Now, that's a filter I've created for myself, and you could say, well, that's just a general filter. Sure, it's a general filter, but it's a filter I'm taking very, very seriously because I've seen situations at lunch, for example, where Powell is supposed to speak, and you have 100% chance that price is supposed to go in one direction, and then guess what? It doesn't go in that direction. It goes a different direction. I'll give you an example. CL on the 31st. Now, I said we were going to talk about the trade from yesterday, but I just started talking about something else. I apologize, but let me just show this to you because it speaks to what I was talking about. Let me just double check my notes to make sure. One thing. 31st. Let's go to 12. MCL. Okay, one sec. CL 1037. Okay, my date got changed, that's why. Apologies, stand by. Okay, there we go. Set this setup. Sorry, give me 1 second. Let's see. Okay. Just set this back up to 10:30. Okay. Sorry about that. Just want to make sure I set this up properly. So I believe Powell was speaking this day. I think it was Powell. But the stats were saying that if the highs form first and then the lows form second, that there's a 75% chance for price to go to the low. And it said if price closes below the MP, that there's a 77% chance that price is going to go lower. Okay? So price closes below, doesn't sweep the target, comes up and tags the entry right here, and then immediately goes up. So this was a news-driven move. And this is my point. When the news comes into play, you have to stop trading. Don't chance it. And this is an example of this. I believe it was this day, but I remember I made a note about it. That's what I got. And then the other one is Trump, right? Trump speaking. It's just never a good sign. He was speaking on the 26th, I believe. Let's just go to the 26th and see what that looked like. March 26th, 12. Let's go here. So March 26, NQ, I believe this was the one. It was a long, low, high. Okay, yeah, this is the one. This is the one. I wanted to show you this. You guys are going to laugh. Okay, maybe not laugh. Maybe you'll cry. Who knows? Okay, so March 26, we have the low form first, we have the high form second, okay? MNQ, where are we? Here, 1025, all the way to March 19. 100% price going higher, above the midpoint. And price closes above the midpoint right here. And then for the first time in 6 months, it doesn't happen. And that's another example of the point. Trump is speaking, and Trump's tweets, Trump's talks, interviews, cabinet discussions, whatever, the data stands no chance. Okay, so I just wanted to drive that home, show this example. You can go back and check for yourself on these dates if you'd like. That is what I had noted. So that was that. Let's just quickly go back to yesterday, okay? The Globex from yesterday, because that was a very nice trade. To 1800. And I just want to say once again, I appreciate everyone being here today. I know it's Good Friday, and I just wanted to kind of have a special stream for everybody, because just to kind of feel like we have that routine of these Friday streams and whatnot. I think Matt typically streams in the morning anyways, and then I'm usually in the afternoon, but just thought I would continue it. Let me hit replay. Actually, one sec. Back this up. Let's take it to here. Set our 18 to 1900, 18 to 1900. Now you'll notice I'm using this IB EDGEFUL indicator. When you do sub to EDGEFUL, you're going to get access to like 30 different types of indicators. They all serve different purposes for the most part. But it's you have to kind of figure out which ones you want to use, because like I said, they all do different things. So like I like using the IB breakout one because of course it's pretty obvious. It puts the 50%, 25 and 75% lines in there if I want to have them in there. The other thing it can also do is set levels, so like a 50% level or 100% level, but I prefer using a different indicator for that. I use this indicator called the IB levels. I prefer this indicator, but once again, you can see it's plotting levels here based off of the New York range. Sometimes these levels come into play, sometimes they don't, but I do prefer using them more or less. You can also change that range. So if I wanted to do 1800 to 1900, which is probably what I should do when I'm trading that range, you can see how price reacts to those levels, right? Just missed this one, but you can see the reaction, right? So this is another key indicator. It's a standard deviation levels indicator. So these are EDGEFUL indicators. You get these when you sub to EDGEFUL. So if you do sub to EDGEFUL, just use my affiliate link kindly. But I really like using this indicator right now and this one. I am looking at others, right? Like there's this ultimate reversal one. I'm not going to dive into these too much, but I'm just still like learning more about it. There's an opening candle continuation one. Let me see if I can adjust the time to show what I'm talking about. So there's this one. I mean, I'm still trying to figure out the best way to kind of play these things, or if maybe I don't even need to use them. And then there's also another one called market session. So it just deals with, you'll hear these common terms like inside bar, outside bar days, things like that. What that basically just means is like, if you look at the previous day, here is, technically they say these are gaps, right? So if price closed here, here's your high and here's your low. So when New York opens the next day, does it open below or inside or above. And there's statistics even for that. So if price closes outside of the previous session, like what is the percentage that price moves back into the range, or what is the percentage that price sweeps the previous range, and things like that. So, and then there's another stat where it's like if you're having price close inside the previous day range, what's the percentage that price breaks, one of the ends, or price breaks both sides of the range. Like there's so many different types of data available. How you put that together is entirely up to you. It can get really, really tricky in that regard. But once again, just to show you this, here was the setup from yesterday. Okay, let me pull up my data. Now you'll notice I am sharing all the data so far as of right now. I'm sharing it. So yesterday at 1:53 in the afternoon, I shared this. Okay, I shared all this data yesterday, so you had it all for you to play around with and look at. Because MGC and MCL had already stopped trading, I thought they were still trading, but I realized they're not. Oh wait, where are we? Oh yeah, right here. So, due to Easter, MGC and MCL are not in play, right? And then I said MNQ and MES are, but I think everything's low probability. This is at 6:20, so we're still waiting to see how things play out. I said I'm going to keep an eye on it, and then I said MNQ and MES are currently uncorrelated. And then I started looking at it more closely, and I realized, I made a mistake. MES did form the IBL. So what was I talking about? So you can see here, the open is a little bit weird here, right? So you can see the low forms, then the high, right? But if we go to MES, this is kind of what I was talking about. I was on my phone, and it was really, really hard to see, but I didn't think this was the low, so I thought, the high formed first, then the low formed first, and then we have an equal high here, right? Because it hasn't swept it. So that's why I was saying, it's uncorrelated. But then I went back and I looked more closely, and I realized that the low actually formed first here, then the high formed second, and then this candle doesn't sweep it. So technically, they are now correlated. So when I had that stat, then I went, okay, I think the NQ trade is valid now. Okay, I think the NQ trade is valid because of that. So I said, stand corrected. They are correlated. I said it's not pretty because ES made equal lows and equal highs, and it's not super clean. But I did say MNQ is clean. So right here at 7:04, I gave the trade. I set it up for you. I showed you. You can see it's 1 point above, 1 point below, right? I set this up on my phone. I put God first. And you let price do what it's going to do, right? So let's just look at the stats. So the data is saying if the low forms first, there's a 100% chance, especially if price closes above the midpoint. Okay? So that's like a super, super good stat to have. Super, super good stat to have. Let's double check one more thing. I think I had another... Did I have another one? No, I do not. I don't think that was the right data piece. One sec. Yeah, sorry, that was the wrong one. Okay, so April 2nd, Globex. Apologize. Just got all my pictures all wrong. MNQ. So IB low forms first. There's a 94% chance to the IB high. Okay? If it closes above the midpoint, there's a 94% chance that it's going higher. If it closes below, there's a 100% chance that it's going higher. So when you see stats like this, it's like I was saying to you earlier, you have to take it per the probability, no matter whether it closes above the midpoint or below. In this situation, price closed above. Okay, so if I'm setting this up once again, I have set like this. And the second price closes here, I am personally like to wait. Okay, I like to wait until it closes, especially if there's like contradiction type messaging where, like, if price closes below, for example, it might say like there's a 100% chance for the inverse short to play out. In those scenarios, like, you gotta wait. Okay, you have to wait. You have to wait because you don't know what will happen in that last minute or second. Because if price closes below, your stats that you're using to play the trade are gone. What do I mean by that? Well, if you look here, I have things like this, right? For example, I mean, this didn't happen, but this is my point, right? IB high first, 55% to go short. If it's above the MP, 100% IB high, inverse long. So what does that mean? It means even though the high gets formed first, if price closes above the midpoint at the time of 7 o'clock, you should be looking for a long setup, not a short setup. But if it closes below, you now have an 83% chance that it goes lower. So this is an example of why you have to wait. Steve, whether you take the trade on the 50-minute or the 1 minute, it doesn't matter because the range is the range, right? 7 o'clock is still 7 o'clock. So it doesn't matter. I personally use the 1 minute to set everything up on because I want to see specifically minute to minute. If I go to the 50-minute, it becomes trickier, I think, to sometimes see what forms first, right? Like the high or the low, sometimes. In this case, this is what you see, right? This is what you see. It looks like it's closing right here. So if I go back to the 1 minute, it gives me more clarity because now it's not telling me that price closed below. I can see price closed above, and that's kind of my point. That's the difference between the 1 minute and the 50-minute, and why I use the 1 minute because I need 100% clarity before I take a decision to take a trade. Okay, so this closed above. This tells us that once again we have everything in our favor, and even though MES doesn't have the statistical advantage I think that NQ had. And why do I say that? Like, why would I take MNQ over MES? I'll explain to you why. Number one, I already showed how I don't like the way these candles were, right? It's not super clear. Another thing is look at the volume on MES. These candlesticks look dead. They look like, even though it could work, it's just like, I don't know if I want to trust entering a trade like this because anything could happen. But if I go to MNQ, we have massive clarity. We have full-size candlesticks. Yeah, the volume's a little lower. We already know that's going to happen. But the candlesticks look way better. I would rather take that chance on NQ, right? So we take the trade on NQ. We enter right here, 24198.25, like this. So I would have, as the candles are closing, and this is just more of a trade management thing, as these candlesticks are closing, I already have this set up. I already have this set down here, and I have this set up here, and I'll just show you once again. So I have it anchored like that. Then I'll just go to the profit and move it 1 point up. I'll go to the stop, and I'll just move it 1 point down so that it's above and beyond the actual IB range. And the second this closes, I hit the limit buy order entry. And then my TP is set, my stop loss is set, and my entry is set. And I just wait and see what happens. And that's it. Now, interesting story. So we get this entry, and then we have, let's look at the time for a second, okay? So entry starts here at 7, literally at around 7, like as, you know, we'll say 7:01. This price action is in drawdown for 20 minutes, okay? Which is fine because the data is saying to us, you have nothing to worry about, right? There's a 6% chance that price is going to hit the stop loss. So this is the beauty of things. It's like in the past 6 months, only 6% of the time has price tagged that low. It's a chance or a risk that's definitely worth taking. Now, a couple things to note. You enter here, and if price starts to dip lower, you have to ask yourself, do you want to enter again with the dollar cost entry? Do you want to maybe add another quarter size to your position, or maybe half size? I don't know how big of a position you would have taken anyways, but when I see stats like that, I always keep in the back of my mind that if price does go lower, I might add another 0.25% to my my entry, and if I take the loss, I take the loss. But I'm playing the odds. The reason I would do that is that it increases my profitability should price go up higher, right? It also lowers my entry point, so now I'm getting a better RR out of it too. I can't tell you what to do. I'm just trying to put some seeds in the ground, and you can do what you want with them. Now, how would an inverse short or long play out? I'll show you in a sec. So this trade's 20 minutes underwater, and then finally we get above water. And then we see, oops, wrong one. This, start here. Then we see 37 minutes of price consolidating, flirting with the TP. So I was watching this trade with my son and my wife around here, and we were watching this for 37 minutes roughly. Well, I wouldn't say 30. I would say probably maybe about 30 minutes, somewhere around here. Okay. Point of my story is, in this moment, it's interesting because I know the stats are telling me this should be wiped out. And I'm like, do I just take the TP? You know, I'm so close to it. Do I just take it and be happy? Or do I wait? And my son's like, just take the TP. Just take the TP, right? He's 8 years old. Just take it. Just take it. It's a win, right? You're not going to lose, right? And the other thing is I had already moved my stop loss to break even. Okay, so I already knew this trade's either going to be a winner or it's going to be a break even trade. I decided to put it at break even because I just thought, you know what? There's no reason for price to come back down here. And if it does come back down here, you know, that's not really a good thing. And I don't want to be in a trade if it's going to do that. I don't care what the data is telling me. I'm just mentally too tired for this to not play out. So I set my stop loss above break even, and we were just watching this. And this is where my wife was like telling me, like, oh, go back to the 1 minute. And I kept going back to the 5 minute because the 5 minute looked significantly better, right? When you're looking at this, it looks way better than looking at this, just given what's happening here, right? Especially when I saw this candlestick, I was like, oh no, this is not good. But when I went back to the 5 minute, here's the thing I'll show you. And this is where, you know, you can't take the ICT out of an ICT trader. I literally was like, well, what could support this trade? And I'm like, there is a 5 minute FEG right here. So I started teaching my son about FEGs. And I said, hey, there's a 5 minute FEG here. So let's see how price responds to that level. And even though that mega candle dumped, look at the respect to the 5 minute EQ and the FEG itself. Even with this shitty candle here, right? Exactly. 1 minute IFEG from a 5 minute FEG. Yeah. But like I said, it's hard to not use what we know because it's so ingrained in our mindset or our psyche or our trading IQ. Like, we have learned all these things for a reason. So I was trying to find ways, once again, to support why this trade should work out from an ICT perspective. And when I saw this, I was like, okay, we're still good. Until, if I see this level get lost, then I'm going to be a little bit more like, oh no, because there's a volume imbalance right here, right? But because it kept getting supported, I was like, okay, we have a chance. And then I saw this candle, and then I knew once I saw this candle that, you know, we're good to go. Like, this is it now. Like, it has to go up higher. So if I go back to the 5 minute, you can see how much cleaner it looks here. And then of course we get the massive rocket candle that goes higher, right? So this was the trade. I find these Globex trades, they do take some time. This trade lasted about 1 hour. They do take time from what I've noticed compared to like the New York ones. But you know, that's IB for you, right? Like I've been blessed with IFEG setups that work out in minutes, right? So like I'm very used to these 3 minute, 7 minute type trades. I'm in and out with 1 hour. But with IBs, you got to be a little bit more patient. You know, let the trade play out. I think for me personally, when price starts to get into that upper echelon of the range, I typically will move my stop loss to break even because I just don't, especially with the news and you just don't know what's happening. Like I'd rather just play it safe and not lose any money than to just keep it here and say, well, set and forget type thing, even though I guess you can do set and forget because you're playing data. So I think it's just part of the risk management piece that you yourself as a trader have to come to terms with and figure out. So I hope that put some perspective on the trade last night. That was a banger of a trade. Congrats to anyone who took it. I know there was a bunch of us in the chat that took it, and we kind of all came out in the chat and started to celebrate. And I think that's the beauty of this community. Like, I know we all kind of came here starting with unicorns and whatnot, but you got to remember, like, we were learning the foundations, right? We were learning the foundations to how to read a chart with more accuracy, right? To give us a better probability of what to look for and what to do, how to react. Doesn't mean you have to stick to one thing, right? You got to explore. You got to try things out. You got to push the boundaries of your perception of what's out there. Expose yourself. In order, like, the thing is, once you start exposing yourself to all these different things, that's when you're going to start to grow as a trader. Your personality is going to change, right? You're going to see things a little bit different. So it's important. And then you can always come back to a lot of that stuff you have as your foundation, right? Like, I came back to something as simple as an FEG in this setup, but that's something that I pulled from my foundation. And you might say, well, it's just an FEG. It's not a big deal. Yeah, it isn't a big deal, but you try to do that in real time when emotions are at play and, you're trading 5 funded accounts or 10 funded accounts on a trade like this, right? Your emotions are going to go out of whack, right? You're still human at the end of the day. Finest had said, hey, how do you inverse short on a long play out? So the way it works is this. So let's just say, hypothetically speaking, we'll just use this setup as an example, right? So let's just say the low gets formed first, then the high gets formed, but then it says if price closes below the MP, that there's a 100% chance that price is going to go lower. Okay, so let's just say, for example, this candlestick isn't the 7:01 closing candlestick. Let's say it's this 7 o'clock candlestick that closes. So it would have been this. Let's say it's this. So it closes below. What I would just do is I would just invert the play. So all I would do is set a short order like this. And this is why you got to wait when you have those statistics that are going against each other. I would go like this. I would go to my stop loss or my profit. I would set it 1 point lower because I want it to go lower. And then my stop level, I would just put 1 point higher so that's just above. And that's it. And then you would just let price do what it's going to do. Now, don't use this as this is just like an example of what we're seeing. But this is how I would have played it then, right? If it was the reverse. But that percentage has to be really, really high in order for me to take a stab at that. And things have to be like correlated. That's the other thing, right? Like, if MES isn't correlated for that inversion, then you got to be careful. I find the inverted plays work better when I'm using them on CL or if I'm using them on MGC. And I learned this through another trader, Vidal, I've talked about before, but he was doing inverted plays, and I was like, oh, I never even thought about taking an inversion play. But it works, and it works really well on those singular type assets like MCL or MGC. I try to not take it on MNQ or MES just because of that crazy correlation. So that's my answer to that. Yeah, Mike, I haven't read everything you posted above, but I appreciate you sharing whatever you're sharing up there. I know you and I have had some in-depth conversations about things. And, I think the beauty of it is just independent thinking, right? Like, you take something that sparks your interest and you start to analyze it, right? You look at the data, you look at the raw data, you look at whatever data you can get your hands on. And if it's through backtesting, it's through backtesting. For me personally, I'm more in line with live testing. I like to see the price action, candle by candle, and experience the feeling that I have while I'm trading it and build my data that way. Because then, for me, I feel like I learn lessons quicker. My confidence is already there because the data and all these examples that I've been showing inside the thread, inside these live streams, they're just supporting the move. Even when it looks like price is going to stop you out, like I showed you on that first example, it didn't, because the data was so high probability to go the other way, and it still went the other way. There was a trade that happened a night before. I believe it was on... Geez, what trade was it on? Hollis, do you remember? Was it gold? Or I remember me, and Vidal were sitting there trading it. Do you remember that one? I feel like there's too many charts I'm looking at, man. You remember that trade? He got stuck because he took the ES trade or something like that, or he took the NQ trade. I forgot which one it was, but I remember it was a Globex trade. Maybe it was the first. Yeah, he took ES. Okay. I think it was a Globex trade, if I'm not mistaken, man. I'm going to have to go through the chat again, man, just to find it. Let me... You know what I'll do? I'm only bringing it up because I just wanted to show you how crazy... I think it was the day Trump was speaking, actually, now that I think about it. Sorry, stand by one sec. Let me just see if I can find it. I did post a loss here from a lunchtime session. I know I was going to talk about lunch, but this was a loss on MNQ, and the data was really good. What I'll show you here. Oh, sorry, this was a London session move. Excuse me. But let me see if I can find... My time now worth less than EDGEFUL monthly subscription. It's cheaper for me to do backtest on my own. Also, I'm not 100% sure how they gathered it. April 4th, brother? Okay, thanks. Hold on a second. April 4th. That doesn't make sense. What? Are you sure it's the 4th? I was like, bro, are you in the future, man? Nice one, nice one. Sorry, I'm just going back quickly here. You sure it was that the 3rd was yesterday, though? We didn't have that issue yesterday. I think it was the 2nd, wasn't it? I feel like it was the 2nd. Oh, the 2nd was yet. No, I'm mixing up my days now. Oh my goodness. Apologies. Let's go back to the 1st. I feel like it could have been the 1st. Wow, look at that. That's crazy. The 2nd was yesterday, right? Mixing up our dates. Oh, actually, you know what? Was it this one? Oh, no, dude. It was this one here. It was the 1st. It was the 1st. Had to have been this one. Okay, so... Yeah, it had to have been this one, man. Take care, Micah. You got it, man. Yeah, we're almost done here anyway, so I'm just going to show this quickly, and then I think we're out. I mean, I guess I could show the lunch, but we're running almost an hour and a half here. So I think this is the trade. So I'll just mark this right here. So you have the high, you have the low, and then price tags the entry here, right? Closes below. Let me double check. Did I put this in my chart? Yep, I did. Was the first? Yeah, so the stats I had were for the short were 67%. Okay, so not that good. But if price closed below the MP, like right here, then what that means is it increases to 73%. So when it said 73%, I thought, okay, you know what? I like that. 73% is good. It increases the odds. I will take that trade. I don't have the numbers on NQ. Let me see if I can find it. The first. Okay, here it is. April 1st, MNQ. If the high gets formed first, is this the one? 73. Wait, this can't be it. This is the wrong time. Sorry. Lunchtime. Sorry, post so much stuff here. Okay, here we go. Okay, so this is a good example of that inverse long type idea, right? So MNQ is saying if the high gets formed first, there's a 50-50 chance. If price closes below the MP, 64% chance. So I immediately was like, I don't care what's happening. I'm not touching NQ unless both assets close above the MP. If they don't close below or above the MP, then I'm only going to look at MES because 73% aligns in my threshold, 64% is below. So I'm not going to touch that trade, okay? Now, had price closed above, then I would have been looking at the longs, 100%, and I probably would have stuck with ES, I think, but I would probably just double check and see in real time as to which asset was stronger, and then play off the stronger asset. That could have been another way to kind of think about things, but that we didn't have to think about that because price closed below. So this is the reason why I didn't take NQ and why I took ES. So if we look at ES tags the TP at 1951. Okay, entry is tagged here at 908. This trade lasted about 43 minutes. Okay, now I want to go to NQ for a second because I want to show you something. So we were taking this trade, and all this myself. There was a few others, but Vidal, another one of our guys, he took NQ for some reason. And what was really crazy was, and I just want to show you this. This is why my stop loss goes 1 point above the high. This doesn't hit the high, but I mean, that came so close because I thought if this tags this out, there's a good chance the ES trade's toast. Okay, so 714 right here, we can see price nearly tag the high. Okay, let's go to the same asset or the same time but on ES. You can see ES is the weaker asset, right? Clearly, but for some reason, like I said, Vidal had taken the trade on NQ for some reason. He has his reasons. That's cool. No judgment. Point of my story is this: with the data saying what it was saying, which is 64% chance. Okay. Get rid of this. We don't get the sweep. Literally misses it by like 1 point, man. Look at that. 24,204.5. This went to 24,204.25. Okay? This is why you don't panic. You just let the trade play out. If it's going to hit stop, it's going to hit stop. But let it hit stop. And then you get this. Okay? So now price starts to finally move lower. And we were all watching this and all having a panic attack. Because we don't know what's going to happen. So at 7:51, ES tags on a violent spike. Right here, violent spike, 2 candles. All it took was 2 candlesticks, 2 1-minute candlesticks to hit TP. This is how fast these things can happen, right? But when this happened, it kind of came out of nowhere, and we all were like, oh my God, especially this 1-minute candlestick. Because look, it goes all the way down and then gets bought all the way back up to break even. Okay, so you get this, and Trump is supposed to speak at 9. So why did I take this trade? Because it happened before that. I thought this trade could probably end before that, and for me it did. But as we start getting closer, the volatility starts to increase before Trump's about to speak. So we go back to NQ, and look at what happened. It front run the exit and then went all the way back up. Now he got stuck in this trade, and you know, testament to him, man, because he being Vidal, he did not give up on the trade. He just set and forget it, really. He was like, you know, let it play out. A bunch of us were like, man, did you exit? Did you, like, what happened? Are you still in? Did it hit break even? Like, what happened? He's like, no, I'm still in. And then all of this started happening, and then it went lower again. And then we were like, dude, okay, don't take any chances, right? Like, take your profit. This guy didn't take his profit. And then we start getting these crazy wicks. I'm like, man, did you get tagged out break even? Like, what are you doing? You're giving all of us a heart attack. Allis, did you re-enter that position? I can't remember what you did, bro. Did you re-enter that? I don't know, man. I know you're like, I'm not leaving any man stranded. This guy re-entered. What a G. So I was just there for support. I was like, I can't leave until we know what happens. And my wife was like calling me, and I'm like, I can't let Vidal down, man. Vidal's in a trade still, and he's not here, but hopefully he'll listen to this. But I was like, I can't leave. I'm like, Vidal's still stuck in the trade. I need to give him support. I need to keep posting funny gifs and shit. So, crazy. All this happened, and then finally price sweeps TP, and he catches his TP. And the only reason I'm showing this is because, number one, this is why you just perhaps set and forget, right? And I talked about how, like, if price came that close to my TP, would I exit break even? Like, I don't want to take any chances. I probably would have got taken out I probably would have got taken out here. I definitely think so. Or, you know, maybe I would have taken it early, just given how crazy things were. There's a good chance I probably would have got taken out here at break even, and then I would have missed the TP, which would have happened, you know, minutes later. So it's a testament to setting and forgetting and just letting the probabilities play out. Number one. Number two, even with Trump speaking later, the price action still did what it did. Now, if Trump was speaking, then this whole thing turns into a big hot mess, because you no longer have probabilities on your side. But because he's speaking at 9, anything prior to is still fair game, in my opinion. And sure enough, TP gets hit. I don't know where this goes after. There. So, very interesting how this all played out. This was a super, super nutty trade. Let's just say if you did take that NQ trade, hour and 4-minute trade, that was a wild time, man. That was a wild time. But, you know, that's the fun of trading, right? Is you're going to experience highs and lows, and they are going to happen in the same trade, like a roller coaster. So, highlights to what I'm saying with this. I explained, number one, why I took the trade, time-wise, because Trump was speaking later. Number two, I took this trade because on MES, because the statistics were better. They fit my threshold, right? Someone else's threshold might be 60-something%. Who knows? My threshold has to be above 70, right? So 73%, because it closed below. I'm going to take NQ. Or, sorry, I'm going to take ES, not NQ. And then in terms of what happens after, this is why I also don't use market order entries. I use limit entries, because I showed you the trade from last night, how price just went completely lower, right? And then my wife had said to me, like, oh, like, did you exit or did you hold? Did you sell lower? Like, did you get the whole move type thing? The thing is, you never know if you're going to get something like this happen, right? And this is something that if you're experienced as a trader and you've kind of overcome your, you know, the challenges of greed and the challenges of, euphoria and all that stuff, and you understand what the mechanics are behind the trade with the risk management piece, it doesn't matter what happens after that level gets tagged, because your trade was only to that level, right? So for me, I was already out of that trade, right? Now, I can put the levels on this chart and say, well, what happened, right? But price never ends up going any lower anyways. And imagine if I was trying to manually exit this trade, I would have missed this. And then I would have had to wait. And there's no telling what's going to happen, because technically the target's hit, right? So this is why I set limit entries to place my entry. For the most part, I will place like a stop limit entry for the stop loss, and then I'll also place a limit TP entry as well, so that I can exit. And sometimes you're going to get slippage on your side too, right? You never know, depending on how violent the move is. But yeah, that explains that trade. Given the time, it's already 11. I think I'm going to have to postpone talking about the lunchtime stuff. We'll do that next week. I'm not sure what's happening on Monday. Take care, Lola. Lola. Have a happy Easter. God bless. I'm not sure if Monday's still going down or not, so I'll have to wait and see. I know I'm off that day, so I mean, I have no problem jumping on stream again. I think the markets are open, if I'm not mistaken, anyways. So, I mean, rock and roll, right? So, anyways, we'll end there. I appreciate everybody's time today, especially for those that are still here. And I really hope you all had a good week. Go touch some grass. Enjoy the weekend. It's a time for reflection, time for spiritual renewal, time to remember Christ. And God bless to you, and God bless your families. Peace out.